What is going on, YouTube? My name is Lucas. Like I always say, I'm going to keep the content flowing. Today, I'm going to update you on oil and where we currently are, especially after that epic collapse. So for more information, stay tuned. The black gold. Man, I tell you what, we are always fighting over oil, it seems like. It's always in the news. It's definitely the headliner when it comes to commodities. So, I'm not going to go into a complete history lesson on what got us to the point where we're at. If you're interested in seeing how we got here, I suggest you watch this video right here. So to continue on to where we currently are, obviously, we had so much oil in production that it just caused the prices to collapse. I mean, we clearly had an oversaturation, and that's what caused oil prices to eventually go negative, which we've never seen before. It was crazy. By no means have we come out of this completely unscathed. That is far from the truth. And everything that I refer to this as is that we've basically bandaged the bleeding. We've stopped the bleeding. Somehow we've wrapped it with as much gauze as we possibly can, because we were in a terrible state when it comes to oil, and it was definitely affecting the stock market. I mean, that was one of the biggest things, is obviously this commodity was impacting the stock market, causing stock prices to go down along with the coronavirus. I've discussed this in numerous videos, but oil is a major player when it comes to the stock market. So since we have an oversaturation, and basically we decided to, as a country, start conserving oil as much as we possibly could. So we basically started putting it in places to store it. And as of right now, we have oil sitting on tankers out in the ocean. Basically, it's just sitting on boats as a storage place. This is going to be one of the most expensive ways to store oil. Obviously, we have it on land, but to continue to preserve it, we put it on boats. And according to Jeffrey Curry, who is an analyst for Goldman Sachs, stated that this is the most expensive form of storage. So, moving forward, how is this going to play out? Mr. Curry stated that obviously we're not going to see a major rebound in oil prices right now, because it would just basically be a replication of what we just went through. So what he's saying is that if we had a major rebound in oil prices, what would eventually happen is that we would just have such an oversaturation. You know, you would have those major players in the countries like Saudi Arabia and Russia that would just start to reduce the price and ramp up production again, and then we would just go back through the same process. So we're obviously not going to see a massive rebound right away. And like I stated, we have such a saturation in storage that we can probably get through that first. And more than likely, we'll get through what's on those boats first, since they are the most expensive. And for oil is not even a thought. And like I stated, you know, we have so much surplus that it's probably going to cause oil prices to continue to drop at the pump, which is going to benefit everyone, sure. What is the current state of oil prices? What is the current state of oil stocks? Well, ladies and gentlemen, I'm here to tell you. That is what I'm here for. So, I'm going to start this one off with a bang. Number one on that list is going to be ExxonMobil. ExxonMobil is a petroleum giant. They are a monster company located in the great United States of America. The thing is obviously all these have been impacted. I've done videos on them, and the thing is I feel ExxonMobil was prepared. Obviously, we could see what was going on with the oil war. Two countries that were going at each other because they just didn't agree on what was going on. Obviously, they oversaturated the market. They started flooding it with as much oil as they possibly could. This drove prices down, which is going to obviously cause problems in the United States, especially those companies in the United States, specifically the one I'm talking about, ExxonMobil. On my list is going to be ConocoPhillips, and very similar to ExxonMobil, This company is located in the great United States of America. And the thing is I feel both these companies found a way to prepare for the situation at hand. They understood that, yes, two major countries were at an oil war. They understood that, and they embraced it. So how they prepared, they got ahead of it. They accepted the fact that their numbers were going to be down. But both of these companies, specifically ConocoPhillips, had good balance sheets going into this oil war. Obviously, they couldn't predict the coronavirus, and that was going to impact any company. As you can see in many of my videos, a lot of this stuff is being impacted by the coronavirus. So the thing is ConocoPhillips was in a way prepared with a balance sheet. They even announced last week that they were in search of making an acquisition. These companies, I feel that they are starting to climb out of the depths of the 52-week low that obviously was caused by negative oil prices. And like I stated, both these companies have been hit extremely hard by not only the oil war, but the coronavirus. As you guys can see right here, Exxon Mobil opened up at 45.31 on Friday, and it closed at 46.18 with an extended hours of 46.45. Obviously, if you look at the chart, we've had an up and down type week, and obviously with all the news that's constantly impacting oil, that's going to happen. I think oil is still a very volatile and extreme up and down commodity that we're going to see happen all the time. I mean, we are not by any means close to any type of regulation or just relevancy when it comes to stabilization. That's just not the case. So yes, you are going to see a bunch of up and down type days. But one thing we got to focus on is that we are coming off our 52-week lows. ExxonMobil was at $30, roughly $30.10, and we are well off of that. So we're coming back a little bit. So oil stocks, ConocoPhillips is number one on my list. I just really enjoy everything about this stock. I do understand that there's extreme volatility, especially with the oil commodity. But ConocoPhillips going into this obviously had a great balance sheet. They were prepared. And on top of that, they're looking to acquire other companies. That's key. Goldman Sachs is climbing on board with everything that I've stated. And obviously, I can climb on board with them as well and agree with what they are saying. They are putting ConocoPhillips' price point at $51, raising it from their previous price point of $38. And the reason they're doing this is exactly everything I've stated in this video. We have to understand, as investors, everything that's caused oil prices to go down, oil stock prices to go down, the coronavirus, the oil war, the economy shutdown. There's so much going into this that plays a hand. Airlines being shut down. Airlines are a major user when it comes to oil. And just overall in general, the amount of cars that are taken off the roads due to the coronavirus. Obviously we're going to start to see that to come back. And I feel, and that's obviously what Goldman Sachs is stating, we've hit lows. We've hit 52-week lows when it comes to stock prices. The thing is, guys, is we're going to come back from those. It's just inevitable. Obviously, we don't have a time frame. We don't know how long it's going to take, but it will come back. So why not take advantage of these stocks while you can, when you can? Hopefully you guys enjoyed this video, and hopefully you understand the current state of oil prices and where we sit. If you like this video, smash that like button, as it helps out tremendously. And as always, if you enjoy the content, because I'm going to keep the content flowing, subscribe to the channel. As always, have a good day.